People are having a hard time figuring out what's going on in China. Are you seeing the expectant fund flows in and out of Chinese-related ETFs?
Yeah, it's interesting. There's been flows across the board all year and even the last week. But what you have seen is amongst it, when you dig in and you look, a lot of people are moving money out of the A-share ETF and into the H-share ETF, which is FXI. So we have seen a little shift there. But if you really, take a step back and think about it, over the course of the year, the A-share story has been so massive. I mean, the A-share ETF is still up 70% in the past 12 months, even with the sell-off. So I think investors are a little concerned, but it also depends on your outlook. The media has been looking at this story as like sort of a market timing story, but some investors are actually looking at A-shares as a long-term, multi-year story that is playing out, and of course, it never goes perfect. And this is just a little bit of a fit on the way to greener pastures, which are really going to be dictated by the Chinese government.
Right. It's a hiccup in a longer-term story here, and part of that longer-term story is about the MSCI adding China stocks to its indexes. One thing that you pointed out was that there are U.S.-listed Chinese shares that will be added to MSCI's indexes. What does that mean for the ETFs that you look at?
Right. So there's a few ETFs that track just N-listed or N shares, which are U.S.-listed Chinese stocks like Alibaba. The Crane Shares Chinese Internet does, and also the Power Shares Golden Dragon, they do. But broadly speaking, the emerging markets ETFs, EEM and VWO, EEM in particular is going to take in N shares by the end of the year. That will be a 2 or 3% weighting in the index, but there's so much benchmark to the MSCI emerging markets, about 1.7 trillion. You're looking at about $3 or $4 billion in buy orders. So off to the side is this interesting little story about the N share market that's been completely overshadowed by the A shares and the H shares.
Right. Eric, you look at so many ETFs. Tell us the level of fees involved for these China-related ETFs, because it is difficult to borrow some of these shares. How does it compare with other emerging markets?
Right. So overall, China ETFs are going to be a little pricey, probably 50 to 90 basis points of an expense ratio. A good rule of thumb, any area where there's no Vanguard, you can expect higher fees, okay? So that's one thing. But in terms of borrowing, right, that's a whole different ballgame. So borrowing an A-share ETF like ASHR is going to cost you about 10% a year. So for the most part, that is going to be a trade that's on you. But the ETFs themselves are going to be, 50, 70 basis points to get that China exposure, whether that's A-shares or H, or a combination of all, which is what a ticker like CN does, gives you everything.